Good day, ladies and gentlemen. Welcome to yet another episode of the Good Brain Podcast by Seed Capital Incorporated, Botswana. Today we have different content offering for you guys. We are actually going to be looking at something that can help you build your edge, or something that can help you become slightly more consistent as a trader, right? Today we're going to be looking at something called a Fibonacci, right? Which most of you should know if you have done sufficient research related to trading, right? So we can actually just go through the whole process together. Let's actually find out what is Fibonacci in Forex, right? And we can say Fibonacci levels are commonly used in Forex trading to identify and trade off support and resistance levels. After a significant price movement up or down, the new support and resistance levels are often at or near these trend lines, right? So essentially these are really reliable areas of support and resistance, right? But before you can understand the Fibonacci, right, you need to understand these few things, right? So the market, all right, is a series of impulses, corrections. Okay, we move in a push, and exhaustion manner, which I will show. All right, that's what you guys need to know before we go anywhere deep. Okay, so now let's go through babypips.com. So the reason why I have babypips.com up today is because this is the website that I actually used to learn, and I do believe I am at a fairly good level where I think I have developed my system and tweaked it slightly over the years. And that would have never really happened if it wasn't for babypips.com. So definitely check it out, guys. I am not affiliated with babypips in any way. This is just me telling you guys that, look, hey, if you're looking for good information, if you're looking for good content, you can get it for free in a course format without paying thousands and thousands and thousands for a said educator or guru, right? Let's review what we've learned about Fibonacci trading. The key Fibonacci retracement levels to keep an eye on are 23.6, 38.2, and 50%, 60, sorry, I thought 50% was the last one. 61.8% and 76.4%. Okay, the levels that seem to hold the most weights are 38.2, 50.0 and 61.8 levels, which are the main levels that I use, right? And then so on this website, if you want more knowledge and more facts, more gems about the Fibonacci, you can actually come and do some reading here. Okay, and then another thing, identify key swing high, swing highs and lows. Okay, series of impulses and corrections. Okay, so I'm going to start off by explaining what I meant by the market is a series of impulses and corrections, right? So if you pay close attention to the charts, right, we seem to be moving in a push, exhaustion, push, exhaustion, push, exhaustion, push, right? These pushes and exhaustions For example, these are higher lows. And these are higher highs. Right, this is a bullish trend, obviously, push and exhaustion. Can be the other way around. Right, now one thing that you need to understand, right, before even opening the Fibonacci tool is that when you use your Fibonacci tool, you want to be mainly dealing with key significant highs and lows, right? How do we separate these from normal highs and lows, right? Usually our significant highs and lows are those that resulted in a structural break, right? So if we look at this drawing or this illustration here, right, we had an impulsive move off here, we formed a high here, right? We had what we call a retracement. Why do we call it a retracement? Because we came back partially, right, into somewhat of a discount price, right, giving an opportunity for people to get in at a much lower price before trading higher, right? Now what you need to know is that we have something called reversal and retracement. All right, a retracement is a correction, right, an opportunity for people to get in at a better price, right? And so essentially this makes this price level here the most significant higher low. Why? Because it resulted in a structural break that gave us a higher high, right? So the most recent significant low and the most recent significant high shifts as we keep having violations of previously respected structure, right? So again, if we have a low like this, we end up breaking this high, right? We come in, we form a higher high, then obviously our most recent significant low is the one that resulted in the structural break, and the most recent significant high is the one that resulted in the structural break, right? That is why, right, a level like this, for example, right, we may have price come down, okay, and let's just say price fails to form a new high, right? So price trades higher, respects this higher low that we have here, right? We are only said to be bearish once we violate this previous significant high that resulted in a key structural change, right? Before we can now say we are bearish. So now if we go to our monthly time frame, right, you will notice, right, first of all, that let me actually do it like this. Right, you'll notice that gradually over time we've had lower highs, right? It's a lower high, lower high, lower high, lower high. Right, now I want us to differentiate some of these lower highs, right? So yes, this here is a lower high compared to this previously printed high, right? But this impulsive move lower did not result in any key structural break, right? So the most significant recent high is still this one here, right? So this may be a lower high, but it is not the most significant one. That is what I need you to understand, right? The most significant lower high that we have had, I would identify as this one. Why? Because this resulted in an impulsive move lower, so bearish expansion downwards, resulting in a break of a key structural area, right? So this now gives us a formation of a lower low, right? How do we know that this was then validated as a lower low, right? Firstly, pay attention and realize that this is the 1 month time frame, right? After printing this low, price made an attempt to trade higher. We couldn't. We came lower, right? Tried to violate the low. We couldn't. Same thing, right? Price traded higher, traded back into the level, and we still continued to respect this area in general, right? Before having what I think was a retracement, right? We will actually check that out now using a Fibonacci, right? So what I wanted to highlight to you guys is that we actually only put the Fibonacci, or we only use the Fibonacci on significant highs and lows, right? So this works the same on different time frames, right? I just think it is much easier for demonstration purposes to actually illustrate this on the monthly time frame, right? So let us pick the level that we identified. Okay, making it to resolve. All right. That, look at that. Right, so you guys know exactly how okay, so we start off by highlighting our lower highs. Right, so now given all the rules that I have just set out for you and all the conditions that you need to actually put your fib on the chart, right, I have actually marked up this euro US dollar chart, right? As you can see, right, so back to basics, right? What did I initially say? So the market moves in pushes and exhaustions, impulses and corrections, right? So we've had push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion, push, right? So this is just to say for every impulse there's a correction. That's something that you need to know, right? So as you can see, right, we did have our initial swing high there, right, that we validated by, or that we validated when rather price broke this through this key significant level, right? Obviously what we would have done next, right, after the big push, right, we would have waited for a retracement, right, either into the 50 level or into the 0.618 level, right, which I did say to you guys are one of the most significant levels when it comes to the Fibonacci, right? Even if you go back to babypips.com will actually tell you the exact same thing, right? So we wait for that, tap into the 618 level, right, before actually having an impulsive move lower or bearish expansion lower, right? Obviously, it's going to take time for you guys to understand that you need to couple the fib with other strategies, other indications, right? So once you do get to the 618 level, right, how do you make sure that this accumulation is not accumulation for price to go to the upside, right? First of all, if you pay close attention, you'll realize that these are multiple wick rejections, right? And what do we know about multiple wick rejections? They usually do signify order collection of some sort. They also usually signify stop hands, right? They show that liquidity is resting above certain areas, right? So please be attentive, right? As you can see, we had bullish candles all the way up, right? So let me actually draw. We had bullish candle coming all the way up, right? And the first thing that we had in this area, longs, so we had bullish pressure all the way up, right, until we had a slowdown once we got to this key level, right, when it comes to our Fibonacci, right? What we really want to look out in areas like this, what we want to look out for in areas like this is, are we having a slow in bullish pressure? Are we having a slow in momentum, right? These are some of the techniques that we utilize to actually see if price is going to retrace or if we're actually just going to form a higher low before going to the upside, a lower high, sorry, before going to the upside. All right, so on the monthly time frame, we could safely say that the euro dollar is bearish and has been bearish, right? This was the most recent significant lower high, right? We have respected it again, right? And why did this not become a new significant lower low? Simply because we did not violate the most recent significant low, right? But instead, this impulsive move, right, is the one that violated this recent significant low, right? So we actually say that this is the most recent significant lower high and this is the most recent significant lower low, right? So given this data, we may actually just plot our own fib and actually realize that, oh, okay, we are at the 0.50 mark again, right? What will we do? We will look for multiple confirmations, right, to try and establish whether we are accumulating to trade lower or if we are now reversing to the upside, right? Levels like this, what you need to know, right, without overcomplicating things, is that sometimes we perform stop hunts below these levels before price trades much higher, right? I hope that was clear, ladies and gentlemen. What we do on the monthly time frame is exactly what you do on other time frames, so the information on here should be sufficient for good implementation of your Fibonacci, and just play with it. Obviously, you need to use other confluences like the time you enter, candlestick patterns, and other really important things. So thank you, ladies and gentlemen, for your time. Thank you for tuning in once again. We are really grateful. Thank you for tuning into the Good Brain Podcast.